Welcome back to the channel, everyone. On today's video, we're going to be discussing one of my favorite stocks, definitely my favorite Canadian banking stocks during the recent crash that we had a couple of years ago, and that is CIBC. Now, anyone who's been watching the channel knows that CIBC was my largest holding for quite some time, and unfortunately, I did sell my position in total because I feel like A, there's better opportunities out there currently, and B, we're going to hit a little bit of a rough patch, possibly. And we're going to go into why in a second. One of the reasons of concern is the common equity tier 1 ratio. Now, CIBC and BMO currently have the lowest of all the Canadian banks. I mean, the big six, that is. We got down to 11.6%. Right now, they're hovering in the 11s. They're up to 11.9 in the most recent quarter. But if this keeps falling, they're going to need to issue more shares and just come up with some money. So I don't really like that. It's going to bob and weave, but there is a chance that they're going to need to do that along with BMO. BMO's in this position because of the Bank of the West acquisition that they did. They've already diluted shareholders for that acquisition, but they may have to do it again. Some of you may remember they offered shares, I don't know if it was the beginning of this year or late 2022, but there was a dip for that. But it's not the end of the world. This is just one of the potential issues that I see coming up as a possibility in the near future. The second potential issue that CIBC might run into is their uninsured Canadian mortgages. They have the #1 most uninsured Canadian mortgages of the big six, followed by the Bank of Nova Scotia. But CIBC does have more, so I think that puts them in a particular iffy situation going forward because, the interest rates have been rising at a just hypersonic pace, in my opinion. I personally did not think that they would get this high. I thought they would have stopped quite some time ago. They didn't. So, my assumptions were wrong. So that changes my thesis on this company overall. And I mean, I've had this stock for a couple of years now, and I really did super well at it. My average cost, because it did split, was around $37, I believe. So I made a ton of money on this, and I collected absolutely an absurd amount of dividends. I got dividend raises along the way. I really enjoyed it. I held on a little bit too long, but like I said, guys, my thesis changed because of the interest rates. I did not think that they would go this high. Things change, new information comes out, and it's best to take that information in and adapt accordingly. So I clearly missed the top, so that was 163-ish divided by 2 because they split. So in the $80 range, and I got out around 56. I'm pretty happy with this as a holding. I made a ton of money. Like I said, you're not always going to time the top and the bottom. I would have held the stock if things were in a more normalized environment, but I do see some potentially exciting opportunities in the U.S. market, even though it's been, just on a roll lately. I've spotted a couple of stocks. I might talk about it in another video. But anyone still holding CIBC, I think it's a fine company. Short term, it might run into some issues, but I don't think the bank's going to go out of business or anything. I just think that there are, potentially better investments out there for my money. I'm happy if you guys own it. Let me know what your opinions are. Maybe I'm overreacting. Maybe I'm getting too, scared with the macro. But let me know what you guys think, and I'll see you in the next video. Thanks.